Good morning, everybody. Welcome to today's midweek update for what's today? August the 14th, Wednesday, August the 14th. So let's hop into the charts, see what's popping. The market has been on this tear off the lows going back to last week. And that was that was an ideal time to get into, the market back here. It's proven to be the ideal spot to get back in if you were Johnny on the spot and you got in on that day. Anywhere, if you got in late on that day, and so let's say that you got in at the end of the day on Monday, that was a decent let's say that you picked this up here. And let's say that you picked that up right there. That would have been decent for a 2, potentially 3 hour trade. But aside from that, the reward to risk on this hasn't been great. And so one of the things that we love to look at, and we looked at this yesterday, and I want to mention this before we get into the general market analysis, system performance, personal performance, all those things, is that we always want to look at the reward to risk side of the equation. How much do we need to risk? How much reward there is? What are the probabilities of these trades? So let's go and walk through the general market. And before we do that, make sure that you get your questions in. Make sure that you type into the chat. Let us know where you're from, where you're watching from, and let's get into the charts. All right, so we've got the daily time frames up here. As I mentioned earlier, from last week, from last Monday, it's been a slow grind back up to the 50-day moving average. The low risk trade was back here. Is that hindsight, or is that the benefit of knowing where the market had fallen to? I see it coming in already. What's up, Caleb? All right, so down here, right? Well, when the market looks terrible, sometimes the question to ask ourselves is where's price pulling back to? So back here, price had fallen very sharply, very quickly. It had undercut recent lows, and the S&P 500 frankly looked terrible. On the Nasdaq, price had also fallen very sharply, but it pulled right back to the 200-day moving average. So right there, there was opportunity. There was an opportunity in a handful of stocks as well that had fallen back sharply. Well, we'll talk about VIRT later on, but something that I want to mention to you guys, and this is a list that I've been curating now, is a list that I call perennial sector leaders. I think that anybody can, if you want to create a list for like this for yourself, you absolutely can. And I'll walk you through how to do it. If you're interested in my list, you could get it as part of our research program, and there's a lot of stuff in that research program. You could take a free 2-week trial to that. But the thing, well, with a list like a perennial sector leaders list, I basically think of it almost a like a dip buying list. And the reason for that is because when prices fall dramatically, we don't want to just buy anything. We want to buy ones that have been proven to be leaders. Sometimes you'll hear people talk about a quote unquote true market leader. Well, define true market leader. Sometimes people would look at, oh, well, there's the canceling qualities. And if they have the big newness factor to it, or something where they are changing the way that we live, work, and play, that's your true market leader. Okay, that's a decent definition, but Uh, I don't know about you. I want something more objective, right? Because I might look at Tesla and fall in love with Tesla. And for a very long time, I did. I'm a fan of Elon Musk and his work. And I would, if I bought just because I liked him, I like the company, I like the idea of electric cars, then that adds a lot of subjectivity to it. What I'm looking for is objectivity. One of the ways that I like to add objectivity, and the way that I do it through this particular list of perennial sector leaders, is to say, all right, well, which stocks are in the top industry groups, which ones are in the rapidly improving industry groups, and which ones are making higher highs on the week. So I'll do that, and I'll flag that on weekly charts, and for a little while it was also flagging it on daily charts. But we've got NVIDIA up here. You can see how many times it's been a sector leader. So when there's a stock like this, I want to pay special attention to it for when it does have these big sudden drops to say, okay, let's look for reward to risk plays versus trying to look for reward to risk plays on any old thing. This rallied. Sometimes they work well, sometimes they don't. So we need to not just look at, well, is it a sector leader, but we also need to look at overall performance of the group. Here's one that worked very well. Combolt's another one. We need to look at where they fall in their trends and see just how are we able to pinpoint where the reward to risk is. I think that NVIDIA was a good one. I think that Google wasn't. I think that Google wasn't because of how it got to the 200-day moving average. If you take a look at Google down here, it was, you see how it's steadily declining to the 200-day moving average, and the slope of the line is getting there very, very slowly. By doing that, there's plenty of overhead supply, and the reward to risk wasn't there. But if you take a look at NVIDIA, with it having such a sharp drop to that level, you're able to say, okay, if price rallies off the lows, even if it just gets to prior resistance, that's still giving you a fairly decent reward to risk of about 5 to 1, almost 5 to 1. And those are the kinds of things that I'm thinking about, well, with any of these trades. Caleb says that he added NVIDIA today, 5-minute chart, stops at 115.40, expected to move through the 50-day. Soon will raise my stop in 30 minutes or so to see if it climbs. We'll see if it breaks through. I think that the reward to risk was down here. Well, whenever I'm looking at any kind of trade, one of the things that part of what I'm looking for are, does it fit the types of patterns that I'm looking at, right? And that's, I wrote a new book. The new book is called The Trading Success Blueprint. And what this book is it shows you how to write a business plan for your trading. I think that one of the most important things that we could do for our trading, aside from first developing the skills needed for trading, which I talk about in this book right behind my head called The Trading Mind Wheel. After you've got the skills down, you need to develop a business plan for your trading. What doing that will do for you is give you an outline of, okay, here's how I'm going to operate. So the trades that I like to look for are all outlined in my business plan. My business plan or my model book is right in here. So these are the kinds of trades that I'm looking for, and I have definitions for all of them. So if what I'm seeing in, say, NVIDIA fits what is in here, then I'll trade it. If it doesn't, then I won't. Right? So there might be a tight reward to risk. I might be able to come in on a 5-minute chart and say that, yes, I want to take that. But unless if that setup is in my trading business plan, then I'm not going to be interested in it at that particular time. Also on the business plan is how are we going to analyze all these trades? The way that I'm going to analyze all these trades is by seeing, well, what kind of setups are there? Are those setups developing well? And are they developing per the plan? So, system performance. Here's something that I'll do to gauge how stocks are being treated. Right. So I keep different watch lists. You saw one of them. I'll keep a watch list of what's setting up, and anything that's setting up, I'll also move over to this post focus list. So after they've been kicked off, after they've broken out or broken down, that they move over here. So what we're looking at right now is a list of stocks that were starting to set up. Some were good setups, some were not. Most of them not. But to just see how the market's treating these. So I'll flip through some of these charts and see how the market is treating these names. And so far, starting to see a little bit of improvement, a little bit of choppiness, but a little bit of improvement, I would say, in how the market is treating some of these names. But as far as the pattern goes, it's still not the type of reward to risk high probability setups that I like. Well, what I like to see is what we got back here in VIRT. The thing that I liked with this was that it closely matched the model. But aside from closely matching the model, I'll share with you what I liked about this particular one. Strong run up, right? So I was seeing this as a pullback buy. The part of what makes for a great pullback buy is seeing a strong run up, then seeing price pull back in an orderly fashion, which it did, start to undercut some of the short-term MAs, then get support at around the 21 EMA, and then reverse like it did. And to see that action happening on relatively light volume, and then when the reversal happens, see an uptick in volume, just like we did there. That tends to make for an ideal condition. Some of the other things that I'll look at that particular point are the relative strength line, which started to firm up, and also the stochastics, which were still negative at that point, but they were getting close enough to rounding something out where it was still a negative, but it was good enough. It's very rare that a trade will match everything that we're looking for. So it's important to figure out, okay, here's what I'm looking for. How much of the checklist does this trade fill out? Most of the time, I'm looking for a stock to make at least 80% of the core things that I'm looking for, 80 to 90% of the core things that I'm looking for. And then when I'm putting it through this other more sophisticated, more robust checklist that I call the trade gauntlet, that I will let it pass 70%. Question. Question, what's the trade gauntlet? The trade gauntlet is this tool right here. Let's come over to marrowwealth.com, and you could get this tool for free. Just go over to tools and then go to trade gauntlet calculator, and any trade that I'm interested in putting money into, I'll run through this. I'll see how many boxes I'm able to check. Yes, there's a lot of boxes that I want to check, and it'll generate a score. If that score is above a 7, then I'll take the trade. If it's under a 7, then I won't. Why is that the case? The reason why is because I want to put my money into things that are more likely to work. That's the short answer. The longer answer is that I I've done my back testing, I've done my journaling, and I've done my post analysis. And in doing those things and going back through all my past trades, what I noticed was that the trades that tended to do better scored sevens or higher. So that's why I've made a rule for myself to just trade sevens. Sevens are better. So the question that you might be asking yourself is, well, where is the market now and what sort of actions should I be taking? I'm looking at the current focus list coming into today to see how did the market treat these particular stocks today. MHK, Mohawk Industries, was one that I had on the radar, one that I might be trading if I weren't going on vacation next week. I had an alert set at 148.10 just to see how this thing would do. It didn't break out. So far, it's still consolidating. This one is also similar pullback to what we saw in VIRT. Had a little bit of a heavier sell-off, but it had this dry up in volume. The relative strength line is now declining further. The stochastics are turning lower. So this one is a little bit less ideal at this point. Oscar starting to form a pivot over here. It looked okay coming into today. It actually seems like it might be getting a little bit better. One of the things that I look for is for the 50-day moving average to start to curl up. Just flip through some of these names to see how the market is treating them overall. So far, and most of these setups weren't fantastic coming into the day. So why bother to look at them? Because this is telling me what kind of merchandise is on the shelf. And if the merchandise that's on the shelf isn't great, and if the market's not treating it great, then that's giving me some very good insights. This oil and gas play for this bearish ETF is starting to look pretty good as a pullback buy. Volume drying up. Price came into the 21-day moving average. It got a bounce yesterday. It's starting to round out some more over here. So there might be another entry developing just above yesterday's high at 1090. Here's what it looks like on the 30-minute time frame. That's a fairly interesting play. But again, I'd wait for the breakout and then see if I want to take it as it breaks out. So I would set an alert right at 1090, verify that today's low held, and then go for that trade. provided that it still looks good. Any thoughts, any comments, any questions on anything? Caleb says, for NVIDIA, this doesn't fit the normal pattern I trade, but I believe NVIDIA is a true market leader, going nowhere. AI trade is going nowhere without NVIDIA. Uh, that part I probably agree with. 150 risk, we'll see where it lands. So the if I can make one suggestion. So whenever we start to trade outside of the normal patterns that we trade, I think that it's I think that we there's two ways to look at this. One is expanding our horizons, expanding what it is that we're looking to trade. Uh, Nitpick my statement. I've been wrong a lot. All right, so good. I'm glad, and I'm glad that you're a good sport. So, what I would say is that we do want to evolve, right? I think that evolving our trading is a good thing. I think that evolving should be done at specific times, times that we're intentional with. So, if this is a new kind of setup that we're taking, right, and we're looking at 5 minute time frames and we're considering adding a 5 minute chart to our time frame, then okay, does this fit some sort of a new model? If it does, wonderful. Do we have some sort of other thing that we could reference just to make sure that we're still dotting our T's, dotting our I's, crossing our T's, and making sure that this is a good trade. That it's not just it's something where, oh, I think that this is going to move, so let me put some money in and see if it works. Right? If we're if those are the if that's the dialogue that's going on in our heads, then we're starting to get into the realm of gambling, right? Like put it on, see if it works. I hope it's going to be a good one. I think that AI is here to stay. This one's moving, so let's put some money in and hope for the best. It, it's starting to get into the realm of gambling. One of the things that, and it's not to say that we want to we should be focused on the types of trades that we think will work. That part is part of our business. The thing that makes it fall outside the realm of business and back into the realm of gambling would be that here's something that looks good and is moving. Unless if the criteria that you're looking for is there, if that's present, then buy it. If it's not, even if you're like, okay, uh, you know what? I want to play the lotto. I'm gonna go down to the bodega. I'm going to buy $10 worth of lottery tickets. I'm capping my risk at 10, but I'm hoping for the best. Am I a gambler? Or am I setting up a business? I think that's a good question to ask. It's the Don't have bodegas out there. All right, there, your local deli or wherever you might buy lottery tickets. But hopefully the point is made. And uh, all these are things that I would do too. It's not until I stopped, and it wasn't until I got to the point where I was willing to see trades run without me and say, all right, the market's moving, and that's okay. The market's an infinite stream of opportunity. If I'm looking for something specific and that thing that I'm looking for is there, then it's time for me to act. If it's not there, then it's time for me to wait. And that's part of what's helped me. That's part of what's kept me in this game for so long. That's part of what's led to consistency. If we're not consistent, if we're taking trades here and there because, well, we want to be active because the market's moving, because of any other reason that this is outside of my plan, then it's then we don't have a trading business. Any other thoughts, comments, or questions here? I think that the market is at an interesting juncture. We've wedged up off of the lows. The S&P 500 is just below the 50-day moving average. Each one of these indexes has wedged its way higher. It's melt up or start to consolidate. I think that those are the options. And until, well, we have stronger setups, uh, I know what I'm doing. I'm just going to be sitting and waiting, right? Because trying to pick a bottom, like my friend Andrew Rocco said, well, when you try to pick a bottom, all you end up with are stinky fingers. Hey, so if you're going to pick a bottom, you at least want to make sure that it's the right kind of bottom to pick. If we're buying right here, right? Like again, everybody do your own thing. If you see what you see, wonderful. I'll give you my 2 cents since this is my show. Right here, this is a major area of potential resistance where NVIDIA is right now. If NVIDIA is going to pull back, it would make sense for it to pull back right here. Just draw a line. Make this line a little bit bigger. Right, so where did NVIDIA fall first? It fell below the 50-day moving average back on July the 24th. It consolidated a little bit, ran back up to it, and fell almost at the same price, right at around 120. So there's resistance at 120. Then price fell sharply. Down here was your low risk opportunity. And the reason why I say that is because if we draw another line, you could see all this price action back here where it could have found support. And if you take a look at the weekly chart, it was starting to get close to the 40-week line. So it's really this area back here that you can still see on the daily chart. So let's go back over to the daily chart. Prices run back up, and now we're back at that major level, right? Because it's not just price breaking down back here, but now there's all this overhead. And you've got the 50-day moving average in your face. So right now, you're really banking on momentum breaking out and getting through. If I'm looking at a support area on this, the nearest term support area on this chart in my mind is right there. Now let's make this red. It's yesterday's low. It's you have the 21 EMA, and you also have the 5 and the 10 EMA catching up very rapidly. So right at around, I'd say 111, there you might find some support for Nvidia. But I think that you've got some big headwinds right here at 120. I think that you might get some consolidation between those two levels, at least for a little bit. Question from Alberto. Curious how today the indices aren't pushing up and out given the CPI news. Buy the rumor, sell the news kind of day. Yeah, yeah, buy the rumor, sell the news. So do people have an idea? And by people, I mean your major institutions. Do they have a stronger idea of what's going to happen back here and why they're pushing things up? The thing that I like to look for is the low risk opportunity. So let's say that CPI numbers are great, but the market thinks that, oh, they could have been better. Or let's say that things aren't as bad as what they thought. The thing that matters is how the market responds, how stocks are set up. So there's all these things like CPI, like earnings, like jobs reports, like inflation, well, whatever you could think of, those kinds of things are all baked into the price. You have all the major institutions of the world that are looking at all this stuff and they're placing their bets. They cannot move as fast as you and I can. So they have to look at the much larger picture because they're steering a cruise ship. So it's going to take a long time to steer that cruise ship. So that's why they've got to look out 6 months ahead. Yeah, we hear that the market is forward looking. That's one of the reasons why the market is forward looking because the big money players, they have to be forward looking because they can't get in and out like you and I can. But you and I can look at the charts and see which way they're moving. That's one of the reasons why I tend to not look at the news. I'm more interested in, well, what are they doing? And I could see what they're doing right here. I could see that they used that drop to start to accumulate shares. And I could see how price has wedged its way higher. And I could see that, yeah, you know what? If we're looking at the S&P 500, we're starting to get to an inflection point. If I just rest my cursor here and you look at the dotted line, you could see all that. It's right at overhead supply. You've got the 50-day moving average. You have all this mess from back here, well, when the drop started about 2 weeks ago. And you have this area back here from June that might also be resistance. So where's your low risk trade? Caleb says CPI doesn't seem to have moved the market much the last 6 months or so. Maybe it has, maybe it hasn't. Uh, yeah. As far as that debate goes, if there were a way to overlay what the CPI numbers are or what any of the news are and just plot it on the chart and to have that be automated, I think that would be an interesting study to do. But yeah, it's not something that I've needed at all. Yeah, the style, learning the O'Neill style, the Investor's Business Daily style, learning even more from Mark Minervini. The main thing to look for is the stocks themselves. Are the stocks themselves setting up? Are they setting up constructively? If they are setting up constructively, then that's telling us some really great things, some really great insights about the market. If they're not setting up, that's also giving us great insight into the market. Are the opportunities there? Yes or no? And that's it really is as simple as that. And we could pontificate about uh, which way the market's going to move tomorrow. Um, yeah, I'm not a great weather forecaster, and I've been looking at like the weather apps and things. Sometimes it'll say that it's going to be a nice sunny day, and then all of a sudden it's raining 20 minutes later, and it's like, well, when did that happen? And then you see, oh, now the chance of precipitation is 100%. Well, thanks a lot. Let's see. Many fund managers must be on vacation, though. Not much fresh money being put to use. Yeah, maybe, but maybe not. This was a great rally, right? This reversion to the mean, right? So if we're looking at this, let's see. Do I have might have less drawings on this? All right. So if we're looking at this as a box, yeah, we could just have the long position start here and draw this box. Right now, you're in the middle of a box, right? Here's the low of the box, here's the high of the box, and right now, you basically have a one-to-one reward to risk trade if you think that you're going to get in here and price is going to get to new highs. If you think the opposite way, if you're looking for a bearish trade and you think, oh, price is going to break down, then uh, there's a little bit less risk in that because you'd probably be looking to set your stop right at the midpoint. And that might be a 2-to-1 reward to risk trade. Yeah, it'll be very interesting to see which way the market goes from here. Yeah, Caleb. So the CPI numbers haven't made much of a difference in the stocks that you've been in. Okay. Again, well, when we're thinking about what it is that we want to put into our trading business plan, well, we could really put whatever we want in there, right? Whatever we want to analyze, we can put into our plan. But anything that doesn't make it into our plan is noise. And I think that there's a time and a place to reevaluate the plan, but we shouldn't be reevaluating the plan in the middle of the day. All right, we'll take two more questions here, and then we're going to need to call it a wrap. Alberto says, when you do the fib retracement from the recent high on October 23rd bottom, the bounce occurred at almost exactly the 50% level, important levels. So let's see if I can draw it the way that you're looking at. So you're looking between here and here. Yeah, that should be roughly the yeah. Yeah, it's halfway back up. We put on the other levels here. So right now you're at the 5. Uh, the 618 is right at the 50. And you have a bunch of overhead supply over here. So I think that it would be constructive to see the market consolidate some. I still think that you might get a melt up. And the thing about it is that if you're getting in late, then you're kind of hoping for a melt up. And then if you get caught in a wiggle, that's when you might start to second guess yourself. The way that you don't second guess yourself is by taking trades that are in your business plan rather than just saying like, oh, I think it might get in here and I think it might do this and I think that it might do that. And you get into all this forecasting BS. It, of course, it doesn't. It people when people make these kind of forecasts, they don't have confidence in it because it's a forecast. It's just like, oh, I think that it's going to do this. I think that it's going to do that. Well, you don't know, and there's not really much of a plan. So when you're just following your plan, it's okay. I've got my operating manual. It says do this. I'm doing this, and then that's it. You think, well, when I took the VIRT trade that I was forecasting, any of this? No. Like I just took this because, well, that's in the plan. So I'm placing my stop here. I do have a target just to see, like, okay, how much reward to risk is there? But that doesn't mean that I'm forecasting that, yeah, this thing's going to go to 35. I don't know if it will or not. But because this trade is setting up in this way, I'm allowing the opportunity to unfold. Any other questions? All right. So, well, we went late this time. It's already about 15 minutes over. So, I want to say thank you all so much for being here with me today. It's been fun. Uh, I will be here. Well, when's the next show that we're doing? We're doing the Traders Mind Chat show on Friday. That'll be at 1 p.m. Still considering topics. So if you have topics that you want to discuss on this show, please let me know. And then that'll be it. I'll be away all week next week. I'm going on vacation. I'm going down to Myrtle Beach. That should be fun. I'll see you guys on Friday. Take care. Much love and God bless.